This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rose on Thursday, rebounding from 3 days of losses. On expectations, the lower levels may prompt the U.S., the world's biggest crude consumer, to start replenishing its strategic reserve, putting a floor under prices. Still, prices fell more than 3% on Wednesday to a 7-week after the U.S. Federal Reserve kept interest rates steady, which may curtail economic growth this year and limit oil demand increases. Crude was also pressured by an unexpected increase in U.S. crude inventories and signs of an impending Israel-Hamas ceasefire that would ease Middle East supply concerns.
Asia's imports of crude oil slipped slightly in April from March, as increased arrivals in China failed to offset lower purchases elsewhere in the world's top importing region. April imports were 26.89 million barrels per day, BPD, down from 27.33 million barrels of oil per day in March and roughly in line with February's 26.68 million barrels of oil per day, according to data compiled by LSEG Oil Research. For the first 4 months of the year, Asia's crude imports were about 27.03 million barrels of oil per day, only 300,000 barrels of oil per day higher than for the same period in 2023, the LSEG data showed.
Moving on to the top news in the energy sector.
U.S. crude oil and gasoline inventories rose unexpectedly last week as refineries slowed down running rates, the Energy Information Administration said on Wednesday. Crude inventories rose by 7.3 million barrels to 460.9 million barrels in the week ended April 26, the IAS said, compared with analysts' expectations in a Reuters poll for a 1.1 million barrel draw. Crude stocks were at the highest point since June, driven by a large 6.8 million barrel rise in Gulf Coast inventories, boosting them to their highest since April 2023 at 261.6 million barrels, the EIA said.
Russian energy giant Gazprom's average daily natural gas supplies to Europe declined in April by 6% from March but rose 10.3% year-on-year, Reuters calculations showed on Thursday. The calculations, based on data from the European Gas Transmission Group ENSOG and Gazprom's daily reports on gas transit via Ukraine, showed that average daily pipeline exports decreased to 83.4 million cubic meters, MCM, last month from 88.7 MCM in March, but they were up from the 75.6 MCM in April 2023. Gazprom's natural gas exports to Europe this year have reached about 10.2 billion cubic meters. Next, we have the top news in metal markets. China's copper producers are planning to export up to 100,000 metric tons of metal, the largest volume in 12 years, aiming to cool a rally that has propelled prices towards record highs and hit their order books, 3 industry sources said. Chinese producers are selling into the rally, driven by a speculative frenzy that took copper prices on the London Metal Exchange to 2-year peaks of $10,208 a metric ton this week, close to the record high of $10,845 hit in March 2022, the sources said. The sources said about the 100,000 tons of copper was likely to leave China over the next few weeks. The last time China exported this amount in 1 month was in May 2012, data from Trade Data Monitor shows.
London Metals Exchange, LME, on Wednesday launched a consultation requiring producers of aluminium brands deliverable against its contracts to submit carbon emissions data by March 2025. The proposal aims to align aluminium market with the requirement of Europe's carbon border adjustment mechanism, which applies a carbon-related cost to certain imported products. LME approved producers of primary aluminium, aluminium alloy, North American special aluminium alloy contract will have to submit both Scope 1 and 2 emissions data to the exchange.
We will now look at the top news in the agricultural sector.
The large raw sugar delivery at the expiry of the May contract on ICE is not necessarily a bearish sign, traders said on Wednesday, as it could indicate strong demand in the physical market. ICE said in a notice on Wednesday that the deliveries totaled 32,914 contracts, or around 1.67 million metric tons, the third largest for a May contract and the fourth largest for any contract month. Large deliveries are usually considered bearish, since it can indicate sellers could not find better deals for that sugar in the physical market, opting instead to deliver at the exchange.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.